So one of the main things that held me back from investing when I first moved to the UK was trying to decide on the ideal platform to invest with. Typically in Nigeria, you just pick a stockbroker, whichever stockbroker that you knew, and most of them charge a similar fee. You hardly ever compared fees because you were looking at which stocks they picked for you and the chances of it actually growing. But over here, it's a little bit different. In this video, I'll be talking about which platforms I use to invest in the UK and how I came about those choices. I'll be giving you the key criteria that I used to select the platforms that I invest in. This video is sponsored by me, so please feel free to like, subscribe if you want to, but most importantly, stay to the end of the video because I have a bonus tip that I'll share with you. So what are the factors that I considered before selecting the investment platforms that I use? Typically, my investment in stocks is through ETFs. I do have a few individual stocks that I select, both here and back home in Nigeria, but the bulk of it is through ETFs in an ISA. But how did I decide on which platform to use? The first criteria that I use is basically safety. How secure is my money going to be? There's no point getting the cheapest and best platform if you have a high chance of actually losing all your investments. So the most important thing I look out for is, are they registered with the regulatory authorities? Are my investments covered by the FSCS? Typically, if it's an investment that is covered by the regulatory bodies here in the UK, anything you invest with them up to £85,000 is covered, meaning if the company goes broke and gets dissolved, your contribution up to £85,000 is insured. It's very similar to what we had with the NDIC in Nigeria, where there's an insurance that covers your deposits in Nigerian banks. So here, the government guarantees that you get anything up to £85,000 that you invest in any company that is regulated by the FCA or under those FCSC guidelines. However, you need to check to make sure, so go to the website. Most companies would state at the bottom of their main website that they're FCA regulated or FCSC covered, but you could also go to the regulatory body's website, I'll link that below, and actually search for the name of the company that you're considering investing with and make sure that they are actually listed on the website. The second criteria that I look out for is fees. For instance, in Nigeria, there's some companies that you invest in their shares and they pay you dividends of over 10%. That means without even the stock price rising, you've already made 10% on your investment. Now imagine if the stock price continues to rise. It's not the same here. On average, dividend rates here are roughly about 4%, and the market typically grows at roughly about 7%. The global stock market is led by the US. So every percent matters. Right? If you're investing and you're expecting 7%, but the platform you're investing in is already taking maybe 1% of everything you put in, you're already reducing your investment potential or the returns from your investment. So you want to go for platforms that they're safe, one, but two, they also don't charge you unnecessary fees. And there are a number of platforms like that. They're actually platforms that you can invest in the UK that do not charge you any fees. They make their money from other sources. I will mention them at the end of the video. The third criteria that I look out for is what investment options do I have on that platform. So it's one thing for you to have a platform that is well regulated, doesn't charge you any fees, but then you get on the platform and you can only invest in maybe their own ETFs. I'm looking at you, Vanguard, or you have other ETFs, but you have limited options, or there are certain stocks you want to invest in and they are not available. Maybe they only give you access to stocks in a particular market and so on. So that's the third option that I looked at. Now, this may not be too important to the average investor there because really you don't want to experiment. Most of the important things you should be investing in are available on most platforms. Most platforms would allow you to invest on the S&P 500, which is good enough for the average investor out there, unless you want to avoid putting all your eggs in the US market. Still, most platforms would allow you to invest in the popular ETFs out there. But it was something that I consider to be important in case you see an opportunity out there. Something like Nvidia, if you had spotted Nvidia 4 years ago, you might not have been able to invest in it or invest in it directly on some platforms. Indirectly through ETFs, yes, but not directly. So that's the third criteria that I use to decide which investment platforms to go with. So if I consider these three criteria, which platforms do I settle on? I end up with two platforms actually. Now, one of them ticks all three boxes. The other ticks, I would say 2.5. It ticks the first two boxes easy. The third box, it ticks it but with a caveat, and I'll tell you why. So the first platform that I use to invest, and that was the first one I ever registered with in the UK, is Trading 212. Trading 212 is fantastic. It's free and it's actually very flexible. You can open on stocks and shares ISA, which allows you to invest in stocks and shares from most stock markets across the world. It is so flexible you could actually harm yourself, which is why I typically don't recommend this for beginner investors. I typically recommend the second one, which I also use as well. Quick caveat, I know I use the word recommend there, but this is not investment advice. I'm not a licensed investment advisor. Please seek out professional advice before making any decisions with your money. Now, Trading 212 doesn't have fees. They charge you sometimes if you buy shares in a different currency from your local currency, the pound, but that's basically to handle the exchange rate and conversion fees. Aside that, if you're buying shares in pounds, it's free. They don't charge you to make deposits, some other platforms do. They don't charge you to buy shares or to invest or to liquidate or anything. The only fees you might be charged with is when you're buying in a different currency, and that's it. And it's very flexible. I've bought shares from European stock markets, from France, from the US, have I bought from China? I'm not sure, but you can find Chinese stocks on their platform. You can find American stocks on their platform. You can find all the stocks from all over the world. You can find ETFs on their platform. ETFs from Vanguard, from BlackRock. It's very flexible. You can do anything you like on that platform, which is why I generally might not suggest that someone that is new to investing use that. Could be a bit overwhelming. I think the only thing you can't get on Trading 212 right now is cryptocurrency, but who knows? They probably have some ETFs that cover crypto as well, so you might be able to get it indirectly. That takes me to my second platform. The second platform I use, and I think this is actually an easier one for new investors or beginner investors to use, is called InvestEngine. Now, InvestEngine, just like Trading 212, it's also free to use. They don't charge you any fees for your ISA, so long as it's self-managed ISA. But if you want them to manage your investment for you, they charge you for that. So that's how they also make money. Quick one before we leave Trading 212. Something else that you can also do on Trading 212 apart from stocks and shares ISAs, they actually started with cash ISAs as well recently, and their rates are consistently one of the highest. So if you're looking for somewhere to just park cash, even if you're not looking for somewhere to park cash, the funny thing is, so for instance, I have some shares with Trading 212 that pay dividends. I typically don't withdraw my dividends. I have a separate video that explains why. Usually I reinvest my dividends, but sometimes it takes me a while to get around to it. What they do in the time being is any cash that is in your account, if it's from dividends or you deposited it, they automatically invest it for you in there. So the whole thing is inside an ISA bucket. I open the stocks and shares ISA, but any dividends that is paid into that account is automatically reinvested by them at the prevalent rate that they are giving out, which is just fantastic for me. So sometimes I just leave the dividend sitting in the account uninvested until I get around to doing my typical analysis on figuring out which stocks I want to buy with it. So that's it on Trading 212. Now back to InvestEngine. InvestEngine typically, they don't allow you to invest in single individual stocks. So they're free to use. You open your ISA with them free of charge. However, you can only invest in ETFs. But how is this different from Vanguard? They allow you to invest in ETFs from different providers. So unlike Vanguard, where if you invest in Vanguard, they also don't charge you any fees. Vanguard did not used to charge you any fees. I think that changed late last year. But the other reason I never even used Vanguard when it was free was because you could only invest in Vanguard ETFs, which is fine if all you want to invest in is S&P 500, for instance. But for someone like me that tends to compare the fees of the individual ETFs themselves, I guess I'll have to explain that in some other video, because not all ETFs are the same. Some ETFs cost more than others, and you might find out that getting S&P 500 on Vanguard might not be as efficient as getting it on BlackRock, or vice versa. Typically Vanguard is quite cheap, but for certain ETFs, BlackRock might be cheaper, or you also have the European provider for it as well. I forget their name now, but the ETFs typically start with X. So you want to have the flexibility to pick ETFs from different providers, even if they're tracking the same index, which is why I use InvestEngine for my ETF investments. The other thing I really like about InvestEngine is the way you actually invest. For instance, if I'm investing with Trading 212, which I still do, you have to say, okay, I want to buy shares of, I don't know, say I'm buying 300 units of this ETF or this amount of that ETF, but I need to know exactly what I want to buy and how much of it for each ETF that I want to buy. With InvestEngine, it's slightly different. InvestEngine just tells you this is your portfolio, 100%. How much of it do you want to split and allocate to this ETF or that ETF, right? So you could say 100% of my portfolio will go to the S&P 500. Boom, you're done. No matter how much money you now put in after that, you can be putting in 5,000, 3,000, 2,000, it will allocate it to the ETF that you specified. Or you could say, no, 75% of it will go to, or the way I like to do, 50% of it will go to VEV, which is the ETF that tracks medium to large companies in all developed markets, right? Typically, global economy follows that ETF. So I'll say 50% of it goes to VEV, 5% of it goes to the emerging markets, and then I'll play with the other remaining 45%, allocate maybe 15% to S&P 500, another 30% to NASDAQ or whatever. And I just split it that way. And then as the year proceeds, I'm throwing in my money in there. I have 500 pounds that I want to invest this month. I throw it in. I have 200 pounds I want to invest next month. I throw it in. It just allocates whatever amount of money I put in there according to those percentages, and my portfolio continues to grow. If you want to see my portfolio, by the way, I have a link to it in the description below. So it makes it very easy for you to decide how you want to invest your money. The other bit of it is when you're searching for ETFs as well, it gives you easy ways to search and filter for ETFs. But the part I like the most is once you have your portfolio and you've decided the percentages across the different ETFs, because each ETF is a mix of companies from different countries, your portfolio could actually look different from what you think. But you could check the reports within InvestEngine and it will show you the breakdown of your portfolio by region, by country, by what part of the world, how much of it is in US stocks, how much of it is in UK stocks, how much of it is in European stocks, how much of it is in emerging markets. Emerging markets basically means China and a few other markets. So it gives you that regional breakdown. You could also check the breakdown by company, because you have some companies like Microsoft that show up in multiple ETFs. For instance, Microsoft could show up in S&P 500 and it would also show up in, maybe if you're picking tech stocks, for instance. So for instance, if I invest in both VEV and I invest in S&P 500, you would see Microsoft in those two stocks, because VEV basically like 60-70% of that is US stocks. So it would show you that maybe you are overweighted in this country. You have too much of your investment of your assets in this country, or you have too much of your investments in this one company, or maybe these 10 companies actually make up 80% of your stocks. So it's up to you how you now want to reweight those percentages. Or you could leave it, put everything 100% VEV and go to sleep. Or say 90% VEV, 10% emerging markets. That basically covers the entire world. And you're fine. I mean, it's up to you. The good thing is you get that analysis from InvestEngine. You don't really get that kind of analysis on Trading 212 or most other platforms that I've used. I mentioned something earlier. I talked about crypto. Now, this is not a crypto channel in any way, but I do have some small change that I leave in crypto just to see what happens in the next, I don't know, 20 years. I don't use Trading 212 or InvestEngine for my crypto purchase. I use eToro. Now, eToro originally is an American platform, but they've actually set up a UK entity, so you can invest in them. You can actually open an ISA with them. It's also free. And you can invest in crypto. You can invest in ETFs. You can invest in individual stocks. So that's actually the bonus platform. But I personally don't use eToro for anything except crypto investments. One, because I prefer the other two platforms. I'm familiar with them. And two, because it actually encourages you to trade. The way the platform is designed, you see what other people are investing in. It's almost like you have Twitter by your side as you are doing your investment. So you see what other people are investing in. You can copy their investments directly from there, which sort of encourages you to just try random things. And ideally, you shouldn't, especially if you're not someone that is going to be paying a lot of attention, like when I say a lot of attention, checking it multiple times a day to change your mind, which is horrible. Any seasoned investor will tell you that's the worst way to make money on the stock market, changing your portfolio mix and investments every day. So I feel that whole community, social media-esque vibe around an investment platform encourages people to do more trading than investing, which I don't particularly like and I don't want to encourage, which is why I do not use it for anything else except my crypto. Even crypto, the whole idea of crypto is all about trading, so let's leave that for now. If you want to invest though, I would suggest those two platforms, Trading 212, InvestEngine. And if you want to pick any one of them, I have links in the description. The link to InvestEngine actually allows you to see my portfolio, how I split my investments across different ETFs so you could copy it if you want. And it's also an affiliate link. They're both affiliate links, the one to Trading 212 and the one to InvestEngine. So if you use it to open an account, once you put money in that account, both of us would get something. I can't remember what it is now. I think it's £25 or something, but both of us get something from the affiliate links. But even if you don't use the affiliate link, you don't have to use it. Even if you don't use it, those are the two platforms that I use, and those are the platforms I would recommend to my family members if they ask me. One other thing I need to mention though is you might not be able to open all types of ISAs on this platform. I mentioned earlier that Trading 212 allows you to open a cash ISA, so you can do cash ISA and stocks and shares ISA. I don't believe they allow lifetime ISAs though. I don't think any of these platforms actually allow lifetime ISAs. You would probably have to check for those on other platforms. There's a video that Damien Talks Money made about lifetime ISAs. I think he made it last year. I'll link that in the description below as well, so you could link to that. He talks about the platforms that you can use to invest in lifetime ISAs. You could check that out. And I think that's it mostly. Yes, so this is a question I get quite frequently. People would ask, can I use more than one platform at a time? And the answer is actually yes. There used to be a lot more caveats around it, but right now the only rule is that if you're investing in an ISA, your total allowance for the tax year as at today is still £20,000. So you could decide to split that £20,000 across multiple platforms. So you could open an ISA with InvestEngine and another one with Trading 212 and put some money in both of them as the year proceeds. But so long as your total investment combined in both of them does not exceed £20,000. What I mean is this: you could put £10,000 in each, or put 15 in one and 5 in the other. So long as by the time we sum up everything you've invested in all the platforms that you've opened, it's not more than a total of £20,000, you're fine. So that's the only rule. But aside that, you're free to invest in multiple platforms. Thanks for watching this video to the end. If you found it helpful, please leave a comment below and let me know which platform do you currently use for your investments. If you haven't decided on one already, or if you haven't started investing yet, leave a comment below and let me know which of the platforms that I've mentioned above would you use, or if you already have a platform, which one do you currently use? And then check the video description. There are links to so many things. I mentioned a few of them as the video went ahead, but there are links to a lot of other things as well. Check the video description for all the links and resources that I always like to leave in there. And then the third thing, please share this video with someone that you believe will find it helpful. Remember, we don't just want to keep the gist flowing. We want and need to get our money growing. I'll see you around.